Hello, this is Joseph Gillette Sr. with Venture Capital Cross. Today's video is going to be about sellers in names where there are no buyers. Just to set everyone's expectations properly, private markets are very one-sided, meaning there's all buyers or all sellers, unfortunately. So if you're an employee for SpaceX or Databricks or Anduril or any of these companies where demand is very high, you will have no problems selling your shares. And in most cases, those companies will do employee tenders where the employees will be able to participate in the tender by selling their shares, and the company will group them together so that you put together 100 or 1,000 employees and it's going to equal millions of dollars, because most investors don't want to buy $50,000 or $100,000 worth of stock from an employee. That's just not enough to justify the paperwork. So if you own shares in a company that does not have demand, the problem is going to be finding a buyer. If a buyer doesn't already exist, it's very difficult to create a buyer. So for example, let's just call it ABC Widgets Company. So if ABC Widgets Company has grown and now it's worth $1 billion, it may be a unicorn. So not all companies where there's no demand are bad companies. It's not a judgment against the company. There's just not an investment market or a secondary market, because private markets are just that. They're private. So companies are not out there advertising their shares. And the big companies where there's demand, like SpaceX and Databricks, they're also not out there advertising their companies. It's just that because of their success and because of what's going on in the public sphere, as far as in the case of SpaceX rocket launches, in the case of Databricks and other companies, it's things that people know about, products or services that are very popular. In the case of Airbnb, when it was still private, everybody knew Airbnb because it became a popular service. So that drives demand. It's usually correlated where if a company is very popular, it's going to drive demand. So if your company is not listed as one of those high demand companies, it's going to be very difficult to sell your shares because it comes down to finding a buyer. So if there's not a pre-existing buyer, creating a buyer is very difficult. So look at it like this. Let's say that you're an investor. You're getting bombarded every day by hundreds or thousands of potential investment opportunities. So I'm choosing to buy your shares in ABC Widgets Company versus all these other investments, which aren't only private markets investments, right? So a private markets investor isn't locked into buying shares of private companies. They could buy multifamily housing. They could buy a rental residential real estate investment where they're going to buy a property, or as a investor in a syndicate of sorts in multifamily, and get income from owning that property or whatever. They could invest in precious metals or commodity futures or anything. It's a huge market. The whole world, as far as capital markets, is massive. There are so many different investments. You've got bonds, you've got stocks, you've got real estate, you've got so many things. So imagine that you're the investor, you have $1 million, and you can only dedicate it to one idea, or 3 ideas if you split it up, but not 1,000 ideas, right? So to create that kind of demand for a specific asset, meaning a private company, is very difficult, and it's beyond the job of a registered representative at a broker-dealer. Or it's beyond the job for a GP of a fund, for that matter. In other words, the portfolio managers, who are mostly the clients of the broker-dealers, so our clients, it's mostly institutional driven, it's the funds. The funds go where the opportunity is. They don't create the opportunity. The companies create the opportunity. You can call it through advertising, but it's really just organically, if you skip the whole advertising of investments field, it's companies creating opportunities by doing businesses and creating blue oceans of markets. What's a blue ocean? Space is a blue ocean because there's not an aftermarket for space. What's not a blue ocean? The car business. The car business is a red ocean. Red oceans and blue oceans is a metaphor to compare new markets to existing competitive markets. So in the car business, you open a car dealership, Toyota knows how many cars are going to be sold within a 100-mile radius of that dealership down to it's very accurate. They have all that data. And Toyota knows that there's going to be X amount of car dealerships in the same radius, and how many people as a percentage are going to buy Toyota versus Kia versus something else. It's a very difficult business, and that's why car dealers very often struggle. That's a red ocean. A blue ocean is something like space or AI 20 years ago. In space, you don't have tons of competitors. You have a small amount of companies all trying to be the next space monopoly. The point is that that's a blue ocean, and investors in private markets try to find blue ocean opportunities where a company is creating a new industry. A great example is Airbnb. Airbnb is not a genius, brilliant, it's not something that is a patented free energy, for example, or something like that. It's just a brilliant business model, which is matching buyers and sellers of properties, mostly vacation rentals, but not only, and other experiences, they call it. But it's a great model, and it works well. And it was an example of something that didn't exist, that now you have Vrbo, you have tons of competitors, and it created a whole industry, if you will, for that short-term rental market, which was more of a high-end thing rather than just whatever was out there. And they did a great job at it. So that's what investors are looking for, is that model, whether it's in healthcare or space or technology or software or AI. The sector doesn't matter. The investment idea is the same. And when a company is at the threshold of creating the blue ocean, like SpaceX, where they're already launching rockets, that's where investors want to invest, because there's millions of seed stage companies that are all talking about how they're going to be that company, but they haven't proven it yet. So everyone wants to invest in the point at which that risk is taken away, and how you can verify that that risk is taken away is by public verification, not by something a company says, because it's impossible to prove. So let's say I say tomorrow I'm going to win the lottery. There's no way to prove that. Maybe I will, probably not, but there's no way to prove that. Whereas if you have a company that has a proven track record, then that's where investors say, okay, I'm going to invest in this because at least that part of the risk is not there. There's other risks, but that startup risk that they're not going to turn into something big has been taken away. So this goes back to companies where there's no demand. It's very difficult to create demand because it involves basically creating the business to the point where they've publicly proven that they're at that stage where that risk doesn't exist. And that's pretty much what drives private markets. And there's tons of companies where there's demand. SpaceX is not the only one. It's just a good example because it's always in the news, and it's something that people understand. People understand rockets. People understand high-speed internet, Starlink, which is popular with all different kinds of people, even people with Airbnb cabin rentals in the Smoky Mountains use Starlink to get high-speed internet in rural areas. So that's a business people easily understand. People don't understand AI so well. They understand kind of what it is, but the AI business is a little bit more convoluted than SpaceX. So that's why many people use SpaceX kind of like an example of this. But it's certainly not the only company where there's demand. There are just hundreds of companies. Most of the AI companies, OpenAI, xAI, also have existing demand. If you're a shareholder in an AI company, AI has been probably 90% or so of net new investment in the last 18 months to 2 years type of range. That's not precise, but it's been the overwhelming majority. Software has also done well. Fintech has not done well. So if you're an owner of fintech companies, Borrow Money, Revolut, it's not guaranteed. It's possible to find a buyer. So nothing is impossible in private markets. So what I tell shareholders of companies that where there's not pre-existing demand, the only way to find out is to document your interest, which would mean telling us how many shares you have, what class are they? Are they common, preferred? Is it options? If it's options, you're going to have to convert them into stock before selling them. If it's RSUs, we can work with almost anything, but it has to be converted to stock first. And document it, and then we document that interest, put it in the market in an anonymous way. So it's not going to be blasting out there. No one's going to know who is the seller. We just need to gauge interest of, that's really the only way to gauge interest is to put an offer out there in a name that does not have existing demand. And then there's another strategy where we can try and match it with similar interests. So if you like Circle, you'll love chain analysis, that type of thing. So we can try and broker a transaction and match a seller in a name where there's not a lot of demand with the buyer. So it's not impossible. We're just setting the expectations that it's unlikely. And that's always subject to change. So the best thing to do is to let us lodge you into the system. And we've had lots of situations where there's no demand today, but 6 months from now, things change, markets change, economics, something happens in the world where that company, suddenly there's a bunch of demand, and that's when we want to have that contact with you that we can bring that buyer to you. We just can't create a buyer. That's the point of this video, is that these markets, private markets, are one-sided mostly. There's all buyers, all sellers. So just to set the expectations that if you have a name in a company where there's not existing demand, you're not gonna find a buyer tomorrow. It's not impossible. We can try. We can. There's a number of things we can do, which I can get into, but it's not impossible. But just to set your expectations, there's not pre-existing demand where a sale is guaranteed. It's not. Thank you, and we look forward to seeing you in other videos about venture capital.